Hey everybody, I think I got it fixed. I hope I got it fixed. If you can hear me, please let me know, okay? Wow. That wasn't a good time to have that happen. If you all can hear me, please let me know. Okay, good. All right, I'm sorry about that. My gosh, what a day to have this happen. Hi, this is Greg Gossett from Gossett Trading and Mentoring Live. I did an update for my broadcasting and then it didn't work. And so I wasn't even sure I was going to get here. So anyway, thanks. Listen, I'm going to cut my normal preamble a little short. Let me go ahead and run the U.S. legal disclaimer and then we'll get right back to everything, okay? Hang on, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, thanks everybody. I apologize for the confusion. Just real quick, here's the format. Gonna run through, take a look at my current positions, as ugly as that's gonna be. We're having just a crazy day. Dow is down 2,000 points at one time. Unbelievable. I'm kind of in shock to see this kind of day, just unbelievable. But, you know, look, I'm trying to be thankful for some things I did right, which was not take too many positions. And of course, position sizing correctly. So look, let's go ahead. This is what we're going to do. We're going to look at my current positions. We're going to talk about when I bought them, why I bought them, how I'm going to manage them going forward. And we're going to take a look at some of your positions. After that, I'm going to do a few minutes on trader psychology. Very, very important. And, you know, I always talk about position sizing, following your plan. And boy, a day like today really explains why. You don't need it a lot of the times, but sometimes you need it. And thank you, Steve, and everyone else in there for taking over while I was gone. I really appreciate that. Thank you so much. So hello to everybody. Way behind on time, so I'm gonna not go through the normal, but let's take a look. All right, Google. Well, it looks like Steve and Kamal and myself did buy Google. We bought it with this bounce off the 200-day moving average. I got up this morning just a little after the market closed and the market was locked up. They stopped trading for 15 minutes. So anyway, I got a little better price here, just a little bit more than my 5% and exit. So anyway, unfortunately, I had to take that loss, but I did follow my plan. So anyway, out of Google. MasterCard, same. I did get out of Google at or MasterCard here at a little better price. I did buy this with the rejection of the 200-day. Of course, got the gap down, but I'm glad that I got it at a better price than right where it opened, based upon after the market opened back up from being locked down. So anyway, had to take another emergency stop on that. Silver, boy, only down 2% today. That seems like a winner. Bought it here at 1610, moved up nicely, hit one profit target. If it closes over the 200, I'll keep it. If it closes under the 200, I'll just have to go get out. That was my initial stop. And then, of course, the overnight SPY trade. Real quick, in case you guys don't know what the overnight SPY trade is, and I wish I didn't know what it was over these last month, but this is a back test from Liz Ann Saunders at Bespoke. Two approaches with this: buying the SPY every day at the open, selling it at the close every day. The second approach is buying the SPY at the close, selling the next morning. If you did this every day since 1993, using the buy at the open, sell at the close would have returned a negative 13.9%. Buying at the close, sell at the open, 634.2%. Past performance, no guarantee of future results. That is true for any approach. You can see the equity curve with the buy in the afternoon, sell in the morning. Nice long term, but in between, right, from the beginning to where it is, there's drawdowns, and I'm definitely going through a big major drawdown here. So anyway, that is why I did buy the SPY. I bought it Friday at the close at 297.46 and got whomped up on at 297.60. I will be taking this again today. I am going to make one change. I'm going to half my position size because of the volatility. Real quick, I did have a couple day trades, one winners, one losers, but luckily the winner was a little better than the loser, so I will take it. We were below the -1 ATR channel. We came into the value zone. We came down. We had this nice V1 here. Here's day one, day two. Day two washed out day one. Day two closed above day one's close. Moved up nicely, moved up more than 1 ATR away from my entry, and then got out here when it closed below the previous low. So I got in at 273.65, got out at 275.01. So not too bad of a trade there, and that definitely helped a little bit. Did have also one other trade. This was a losing trade, but not too bad. I bought the Qs on the 5-minute chart when the 5 EMA crossed over the 20 here at 199.61. Initially moved up really nicely, but my exit was here when we closed below both the 5 and the 20 at 199.08. So I got in at 199.61, got out at 199.08, but thankfully between the two, they were a little profitable, the winners compared to the losers. So I know I'm rushing through this, everybody, but I had a 20-minute delay. Evan bought PPLT here at 82.39, moved sideways. He was holding the 30-day 30 RSI, moved up great on Friday, but then came back down below. So any changes on that, Evan, please let me know. Frank, I don't know if Frank is still in Clorox, is up today. He bought this at 171.66. I think he sold half up here at 177, then went down, rallied back up. So Frank, if there's any changes on that, please let me know. Kamal bought TGT, which is Target at 105 back on Friday. I believe the 200-day was his stop. And was way under. Not sure if he got stopped out with the 5% emergency stop or how he was handling that trade, but looks like he's still up on the trade if he's still in. Evan had a nice trade on Friday, nice V1, rejection of the -3rd ATR channel, bought it here at 364.52. It's up 3% today, so congratulations. And then the last one we had here was Facebook. Steve bought Facebook at the close on Friday with the bounce off the 30, and currently it is under the 30. So anyway, let me take a look here. I'm going to try to go back up. Okay, so Gamer, good to see you, Steve. Thanks for coming, my friend. Thanks for taking over. I appreciate it. Joshua, hey all, good to see you, buddy. Zach, Steve Burns, being new to a lot of this, I was wondering how today and the last week would have compared to other crashes. It's right up there. Bob, hey, good to see you, Bob. Dan, Miko25, hello. Steve said this was the third biggest SPY gap down at the open in history, and the day the market opened after, the 2008 and the day after 2011. Gotta love updates. Yes, Ron. Bob says, is it a Robinhood broadcaster? No, this is the biggest single oil plunge since 1991. Stock charts and Trend Spider both had issues this morning. Wow. Okay. This has been one of the weirdest days I've ever seen in 29 years of trading. I agree, Steve. For those of you too young for 2008, this is what it was like. That's true. William, what a day. Hello to all. Greg, you can only do what you can do. Don't sweat it. Thanks, bud. I appreciate it. Hey, JT, good to see you. JT says worse than 2008. I agree. Hey, Mount Doji, what's happening? Good to see you. Bob, I said hi to Bob. Steve, can you expound on what makes it a weirdest day? I'm still a newbie. This is about the time we need those poems. Kamal says DG. Dollar General up nice today. V1 bounce off the 100 or the 200-day moving average over 50 RSI. Not too bad. Bing He, good to see you, Bing He. Hope you're staying safe over there. Kamal says we are going to Walmart and DG and buy CLX. Good. Um, This movement is several deviations outside the bell curve. It is once a decade type of day. I agree. Picked a bad time to start learning to trade. Well, maybe, Zach, but maybe in a way, maybe a little bit of a reset here on the charts might long-term be positive. Glenn says, old enough to remember the 87 crash. Best thing to do is stay calm, carry on. If you're over-leveraged, cut your position until so you can sleep at night. True. Mount Archie says, I picked up DLTR last week. Kamal, hopefully we don't have a lot of these. Glad stayed calm this morning. I thought it was weird personally because my HVAC tune guy was here this morning and I was concerned that my intraday stop would be hit, but the market was halted after the circuit breaker. Then my broadcaster didn't work. That's true. Okay. Well, okay. Frank's in cash. Very nice. Steve, I'm 100% in cash, my IRA, 70% of my trading account. Okay. Hey, Andrea, good to see you. Sorry if I haven't noticed everyone there. All right. All right. So, listen. This is the time of the day. I'm going to run through this quickly, but this is the time of the day that I do like to talk about trader psychology. There's some really good Facebook, Twitter channels out there that do a great job of putting out good trading words of wisdom for us. And one of my very, very favorite and our favorite friend of the show is Steve Burns at @SJosephBurns on Twitter. So if you've not subscribed to him, please go ahead and do that. You're doing yourself a disfavor if you don't. But look, this is short and sweet, but very relevant. The quicker you want to make big money in the markets, the more vulnerable you are to losing all the money you have. Look, there's a lot of wisdom in this saying. The quicker you want to make big money in the markets, the more vulnerable you are to losing all the money you have. You know, there's a saying in Market Wizards and from Mike Tyson, and they asked Mike Tyson before the fight, hey, Mike, do you have a plan for the fight? And he's like, yeah, I have a plan for the fight, but everything changes when you get punched in the face. And it's the same with trading. You always have a plan, or you should have a plan for trading, but when you get punched in the face like today, you just want to fight back. You go into survival mode, fight or flight. You either just get out, run away from the screen, or the other side is that you stay in and you want to battle and fight the market. And yes, like on a day like today, I mean, I have to be honest, with the whooping that I took, I want to just load up. I want to fight back. I want to make it back. I mean, it's human nature, and possibly some of you have that same feeling today, but I just have to understand it, like acknowledge how I'm feeling, acknowledge that yes, that is really what I want to do, but I can't do it. I'm a professional trader. I have to follow my rules. And, if it takes me a month to make this back, then it takes me a month to make this back. So anyway, please keep that in mind. Don't try to revenge trade. Don't try to make everything back quickly. Just tell yourself, okay, if it's going to take me a month, it takes me a month. It takes me 2 months, it takes me 2 months. People are asking, I had some calls earlier today and they're saying, well, how you doing? I'm like, yeah, not that great this year. They're like, are you beating the S&P? I'm like, well, yeah, I'm beating the S&P handily. They're like, well, you're beating the market. I'm like, I trade for a living, right? Just because I beat the market, just because I have a smaller loss than the market's loss, that doesn't buy food, right? So they don't quite understand that. But anyway, yes, I am glad that I'm beating the market handily, but unfortunately down for the year, almost 4%, right? Compared to whatever the market is, 15 or whatever. So, I mean, I'm grateful for that, but still, when you trade for a living, just having less losses than the market doesn't really matter. So, there's that, kind of compunction, there's that kind of impulse that I have to get my head around as far as wanting to make it back quick, and I just can't do it. And that's why when I saw this today, I thought this was so good. The quicker you want to make big money in the markets, the more vulnerable you are to losing all the money you have. So let's stay in this for the long term. Let's make it back slowly over time. Like Steve said, this is a once in a decade kind of day. Sure, it would be great to make it all back at the end of the day, but it's not going to happen. And if you try, you're increasing your odds so much more to losing everything you have. Listen, I did find this a little off the subject. This is by Lloyd Blankfein. I think he was the CEO of Goldman Sachs or JP Morgan. Apologize, Mr. Blankfein. I forgot which one, but everyone's been asking me over the weekend what they think of the market. But I think Mr. Blankfein sums this up nicely. Fear can take markets lower, but expect quick recovery when health threat recedes, especially in the U.S. Underlying economy strong, banks well capped, system not too leveraged. Unlike 2008, will avoid systemic damage that could take years to work through. Obviously, not ignoring tragic human toll. So anyway, he was the CEO. I'm pretty sure it was Goldman Sachs. I'm pretty sure it was Goldman Sachs. So, this is somebody that probably knows what they're talking about. But I have to agree. I mean, obviously, I don't know if that's going to happen, but probably we will have a quick recovery when the threat recedes. But who knows what that's going to be. So anyway, I just wanted to throw that in. That's Lloyd Blankfein at LLOYDBLANKFEIN on Twitter. Okay. Well. Okay, sorry. Having to catch up here on... Okay, this looks like a poem from Joe. The market came out strong, which is really not my fault, but with all the volatility, it came to a halt. The ships have returned and docked at the port. Today was not a day to start with the short. It's brilliant. It's brilliant, Joe. Thank you, sir. Thank you, sir. That's really, really great. The market came out strong, which is really not my fault, but with all the volatility, it came to a halt. The ships have returned and docked at the port. Today was not a day to start with a short. Okay. I don't know if Frank has... I'm looking to see if Frank has a poem today. Steve says the impulse to get back to even or a loss or a drawdown is one of the strongest impulses I had to overcome. Totally, Steve, right? 100%. Me too. I got to be honest. Me too. I thought a lot yesterday about how, Greg, don't do something dumb today, right? I've been trading a long time, but I'm human and I have those emotions as well. There's a different level of stress trading full time with no salary to count on. 100%. Okay. Frank, if you're there, did you have a poem today? Oh, wait, here we go. Hard to understand. As market turns to quicksand, disappearing gains, but down is not out, even in a rout, because that's what rules and planning are all about. Okay, I butchered that one. Hard to understand as market turns to quicksand, disappearing gains, but down is not out, even in a rout. Because that's what rules and planning are all about. Fantastic, Frank. Thank you. I wish I'd have read that a little better. Okay. Well. Okay, listen, what do we have? We have 20 minutes. I'm going to go down quickly through the charts here. Take a look. Let's see. Oh, we're only down 1,680 now. Okay, fantastic. That seems like a bargain compared to 2,000, right? All right. Okay, Apple, I showed you the little Apple trade I had intraday. I don't see anything on Apple here today. Did we test the 30 RSI? No, we did not. So I don't see anything on Apple yet. Adobe did bounce off the 200. I guess it wouldn't be too bad. We'll mark it. Amazon already rejected the 200-day moving average above. Did not reject the 30 RSI. At least I don't think so. No, it did not. For Amazon, I'm probably going to wait for it to close back above the 200-day moving average, and just do that. Boeing, it's just a hot mess. Berkshire Hathaway, it looks like it did go under 30, over 30. So, but that's about all it has is the under 30, over 30. I'd like to have a little bit more confirmation with another indicator. Beyond Meat, I think I'm going to stay away from Beyond Meat in this kind of market. Caterpillar, my goodness, down 12.75%. The Dow got up above the 30 RSI, but that 30 RSI is acting as resistance now. Same with the regular Dow, the one before it was DDM. Disney down 7.8%, nothing there. Etsy pretty dang strong, but nothing there. Facebook looks like it's probably going to lose the 30 RSI. Gold up a little bit, but nothing I can do there. Google, I already got out with my emergency stop. If it closed over 30, would I buy it again? Probably not. And just because I have another one that I think that looks better than that. Goldman just got clobbered, almost 10%. Home Depot, no. IBB, rejection off the 200-day. But in this kind of market, I want to buy the best of the best of the best. Intel, possibly under 30, over 30 here. I just think I'm going to wait for a close back above the 200-day moving average. IWM, I managed an account for a friend, and I actually bought puts for him. I wish I would have bought them for myself, but I did buy some puts on IWM when it rallied back here, and those puts have more than doubled. Johnson & Johnson, nice little bounce off the 200, but I think there's better. CarMax, my gosh, 26.65. Coca-Cola, didn't quite breach the 30, is over the 250. Lockheed Martin, under 30, over 30, but I'm a little hesitant to only go under 30, over 30 today. MasterCard, well, looks like it might close back over the 30, but I am already out, and I am probably just going to let that one go. McDonald's, under 30, over 30, but that's all it has. Merck, nothing there. Microsoft, I don't think we got under 30. No, we did not. So I'm going to let that one go. Netflix, no. Nike, under 30, over 30. Possibly a false break to the downside. I'll mark that. Philip Morris, nice bounce off the 200-day moving average. PayPal, $31.53. I do kind of like the Qs, and the reason why is that we went under 30, over 30 when we went under the 250 and over the 250. The Qs do back test well with the close back over the. Let's see if I could bring this up. Let me share this over here. So here's the 250 based upon the 200. Now the ETF replay is based upon under 250, close under 250, close over 250. This right now is not a close under and close back over, but I do like that it's under 30, over 30. I would probably use if I get in today, I'd probably use a close below the 250-day as my close stop. But the back test on this is pretty good. Buy and hold 198, return using staying out under the 250, staying over the 250, 386.30. Drawdown only 28.4 compared to 83 with buying and holding. So the buy and hold did in this particular time frame did not perform as well as just keeping it over the 250 and selling it under the 250. So it does back test well, but only a 26.3% winning percentage, but the wins are much, much larger than the losses. But what I do like about this is we went under 30, over 30, and under the 250, back over the 250. So as long as this closes above the 250 day, which is 195.56, I will most likely buy this. Silver, of course, we took that back here at 1610. If it closes under the 200, that's my end of day stop. SPY, I am going to be buying that after the or at the close, but only a half position because of the volatility. SSO, double leverage SPY, nothing there. Bonds, big reversal bar here, everyone. Look at this. This is very, I mean, it's still up 3.54%, but there was a lot of selling into the morning, just like there was a lot of buying into the morning at the open as well. So, you know, for the market to go up, we want to see bonds go down is what we want to see. So maybe that's a start. Who knows, right? Tesla, nothing on Tesla. Twitter. Oh, I swear I saw Twitter up earlier. Yeah, I did. It's giving it back. So nothing there. United Airlines just down every single day. I just beyond me. Natural gas, look at that. V2, day 1, day 2, day 3. Bounced off the negative third ATR channel. It looks pretty strong, but I'm not in the mood for natural gas today because the energy sector is really scaring me here. Big reversal here on United Health Group. Oil down 25%. Can you imagine 25% in one day? VIX, well, up 21.40, about 21.5%, was up, I don't know, 30%. But it got sold into, which is somewhat of a bullish sign. I mean, definitely can go up from here, right? Of course, we know that, but I do like the reversal bar. Verizon, I don't see anything there. Walmart up today, pretty strong. Looks like a bullish engulfing bar, maybe just a little too high for me to buy here personally, but MACD went positive. Relative strength is outstanding. Energy, boy. I'll tell you what, you know, I took a 5% emergency stop on XLE, but, you know, good thing I adhered to that and didn't say, oh, it's low enough, because look what happened here. Financial sector, nothing there. Real estate, just getting hammered. Utilities, bounce off the 200, and health care. So, you know, Adobe looks okay, but personally, what did we get to? We got a 31.76. Amazon, you know, if it closed over the 200, I will be interested in this in the future, but it didn't. Google, okay, so I am at a Google. Well, Nike went under 30, over 30. It looks like a false break to the downside from this particular low. Let's look at the weekly. Weekly doesn't look too bad either. But I'll tell you what, I'm just going to reduce my exposure in this particular market here, and I'm going to buy SPY as long as we close over the 250-day moving average. Then two indicators, right? Under 30, over 30, under the 200, over the 200. Okay. Let me see real quick. a second. Wow. Okay. Well, maybe it's not going to hold there. I don't know. 195.56 right now, or 195.90, 81, all over the place. All right. Wow. Sorry about the confusion and the hurried show today, but man, I just went live and it gave me that error message, and that was it. Mount Doji said pets. P-E-T-S. Well, that's pretty big. That's pretty strong. Just don't quite know if the risk to reward makes sense, Mount Doji, because here's the V1. My stop would be halfway of this washout bar, you know, from down to here. Can we get back up here? Maybe. But I'll tell you what. I mean, I understand why Pet Med Express is probably going up right now. But I'm a little concerned about this big bar. I don't know if the risk to reward makes sense to me anyway. Home Depot under 250 if it makes it. Under over 250. Yeah, if it makes it. With nobody traveling, oil was already in enough trouble before this oil price war with Russia and the Saudis. You're right, Mount Doji. Zach says, with the emergency stop, no matter what happens, if it hits 5% down, you're out, correct? Yes, that's correct, Zach. Even if it happens, you know, at the open or 5 minutes into the market. Yes, you have to have an ultimate stop no matter what happens. And sometimes you'll hit it and it will reverse back up, but at least you followed your plan. Frank, hard to imagine oil prices not going lower. I agree. Greg, Bing He did not go under 30 RSI. I think it did. Let's take a look. I think it did. Oh, it didn't. It didn't. You are 100% right. I was just kind of eyeballing it. But I still like it because it bounced off the 30. But I'm not going to buy this unless it closes above the 250 day. That's for sure. Alex, what should I buy right now? Good to see you, Alex. Thanks for coming by. Well, I don't give any recommendations. I just, you know, discuss what I'm going to buy. And Alex right now looks like if the QQQs close over the 250-day moving average, which is 195.56, I'm going to buy that. If it closes under, I will not buy that. And one of the reasons why I would buy it, because it bounced very close to the 30 and then closed back above the 250-day. If I'm wrong, hopefully I'm wrong small with the close back under the 250. If I'm right, I have some potential to the upside. Mount Doji said, Pet was too big of a bar for me. Yeah, it seemed a little chasey, didn't it? Mohammed, good to see you. Hi, Greg. Hi, fellow traders. Hello, sir. Always nice to have you. So the Dow is down 6.4%. The Qs are down 5.5%. The SPY is down 6.4%. So, you know, it looks like the strongest index today, at least, out of the major indexes are the Qs. Man, what a day. I had a hard time sleeping last night because I knew it was going to be ugly. But on the Qs, I'm not going to buy those, Alex, unless it closes over the 250-day moving average, which is 195.56. Right now it's 195, 196. So pretty close, pretty close. Okay. Man, this has been tough sledding, everybody. This has been tough sledding. You know, for years, everyone was just used to everything going up and going up and going up. And this has got to be a shock to a lot of people who have not seen a bear market. It's one thing to see it on a chart, on a long-term chart, but it's another thing to feel it tick by tick every day, watching the news, seeing the headlines over the weekend. I was like, oh, we're just going to get clobbered. You know, and then to have the oil situation with Russia and Saudi Arabia come out, I was like, oh my gosh. I mean, seriously. Okay, so now we're under the 250-day moving average. So at this point, the trade is off. Not a false breakout to the downside anymore on Nike. It went right up there. Now it is below. And the Qs is below. So at this point, I will not be taking. Yeah. So unless this closes above 195.56, all I'm going to have is the overnight SPY trade. I am only taking a half position because of this monster volatility. I suppose I probably should have reduced positions even earlier than this, but I didn't. So I will do it now. I will do it now. So we're back to 1900. Yeah, let me get this queued up just in case we have a little rally here at the end. Whoa. Look at that last 5-minute bar, everybody. Whoa, ho, ho, ho. One minute on this historic day. Boy, you know, you really get acclimated to stuff. When I saw that first 1,000-point down day, I was in shock. You know, now we have a whole new level here, 2,000-point down day. That's insane. Look at this volume grow in this last 5 minutes. You know, these are the large financial institutions, end of day traders coming in, and boy, is it selling off. Wow, is it selling off. Oh my gosh. Okay, so no trade today because it closed under the 250-day. I did get my SPY position at 274.23. Okay. It's been a while since I've only had one trade on. 274.23. Okay. Well, what a day. All right, so Google hit that emergency stop. That one is gone. I've hit more emergency stops this year than last year and the year before combined, but luckily at least I did get a little higher price on these, so I have to be at least thankful for that. Yeah, and silver rejected, so I'm out of silver also. I sold that about 10 minutes to go or whatever it was. Okay. Well, that's it. I'll tell you what, as a trader, it is difficult to have these losses day after day after day. And it really goes to show you how important it is to take, a conservative position size, like a 10% position size, and why I never, ever, 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 ever have more than 60% of my capital at risk at any one time. I've heard people say, well, you're going to underperform the market, if you're not in 100%. And I was like, everybody talks about underperforming the market to the upside, but they never talk about outperforming the market to the downside. Just like I told you, yeah, I'm down on the year, but I'm down way less than the market. Doesn't pay bills, I understand that, but the point is that people are always focusing on you're never making as much as the market, but they get a little quiet when you lose a lot less than the market. A friend of mine, Dr. Jorgensen, he was telling me, he was talking about, I think my channel, he was at Charles Schwab talking with someone. And he said, yeah, you should listen. And it's like, oh, well, what kind of returns does he get? And he says, well, his goal every year is somewhere between 12 and 18% a year. And he gets that more than 50% of the time. And the guy said, oh, well, I could just put it in the market, buy and hold, and get that. Why would I want to do all that work trading? I remember when he told me that, like I got that weird spidey sense, like, that sounds like something somebody would say near a top. I wish I would have acted on that. But remember, it's not how much you make to the upside when the market's going up as much as it is are you losing less to the downside? And as traders, if we're doing things correctly, position sizing correctly, not having too much position size, not too much account heat, following our plan, we will be able to make or lose less to the downside than just the buy and holders. And that's really our most important goal, right? So anyway, sorry if I sound preachy today, but these are the kind of days where people kind of take this in, absorb it, internalize these, and that's why I always talk about it. Okay, let me see if I can catch up with the stream here. Mount Doji says, any thoughts on HBR? Sorry, Mount Doji, I wish I could have got to that earlier. I mean, nice that it's up today, but I really don't see anything. You see how it's having problems with this previous low here? So it's bumping up against this previous range of support up against it. I don't think I would have taken anything. Oh, sorry, Mount Doji. Yeah, I just did HRB, but no, I would not do anything HRB. Maybe we should stick to poetry. Yes, maybe. Good point. Frank says, sure is cheaper, Jay. Yes, Quad Racer. RCL hasn't seen prices this low since 2015. Man. I'll tell you what, Quad Racer, I've been talking with some people I know about the cruise lines, about, these things aren't going out of business, are they? They're not going to go out of business. But I was talking about this up here. Good thing really good thing I didn't get in, because that just goes to show you, everyone has an opinion. And will Royal Caribbean and Carnival come back? Probably, I think. I'm not sure, but there were really no signals there. But if I can give you my best advice, my best opinion, is in when the market is getting crucified like this, when it is just melting down, just my opinion, but the things that you buy really good stocks, buy the best companies in the world on sale, right? Don't buy no-name stuff and things like that. Like I understand why people are attracted to those when the market's up and you're looking for a signal, but when the market in general, like we are right now, when everything is just down, why not buy the best stuff, right? Like Apple or Google or Amazon or Microsoft, right? I mean, instead of Royal Caribbean, right? Alex says, I've never seen something like this crazy. I think this is probably the craziest I've seen it, Alex. I've been trading since 1994. And yeah, 2000, the dot-com bubble was brutal. The 2008, 2009 was brutal. But I just don't remember the velocity of the down moves and the point moves like we're having right now. Kamal says, out of Google, silver, TGT, did not buy Qs. Okay, I did not buy Qs either. Ramble, you vaping, Greg? Yes, I am. I need my nicotine. PPLT and ORLY closed for me. Going to stick to closed for me. Okay, that means you're out. You're out of PPLT, Evan, and ORLY. Just confirm with me so I can update this. John, hey John, good to see you, my friend. John, the Oracle of Wall Street. I should have listened to John when he said don't do the overnight SPY trade because of the coronavirus. You were 100% right. You were 100% right, John. Absolutely. Oh, Alcoa. So this is a yearly chart. My goodness. We're back to prices back in 1980s. Bing He, there are multiple supports in first half of 2018 for Dow at trade low. If tomorrow still drop, it will be another 8% down to December 28th low. I wouldn't be surprised. John says, I've been wondering if using weekly charts to look for signals might be better than in this kind of market. Well, there's pluses and minuses to using weekly chart. I think they're a little smoother. You might start finding some support on let's look at look at Exxon. I mean, you're literally, to find support, you've got to go back to the quarterly chart, and in the 100 quarter chart didn't even hold support. I was watching that, kind of like exactly what you're saying, John, as far as looking on longer time frames for things and keying off of those. But I mean, look at ExxonMobil. I mean, it's down 39.5% this year. Is that right? 39, yeah. Unbelievable. I mean, their dividend is unbelievable right now. Their dividend is 7.29%, but are they going to be able to pay it? I don't know. They've never missed a payment before, but anyway, thanks, John. But yes, you can look at weekly charts. I mean, here's the weekly on the Qs. Well, down here about 183, $10 down here, that might be a level to work off of if you want to trade off of weeklies, right? And it doesn't matter if you're trading off of dailies or weeklies. The main thing is that you have a support level there. You stay in above it, you get out below it. The only thing I would recommend, though, if you're trading on weekly charts or monthly charts, you probably want to cut your position size in half because of the larger movements on those time frames. Glenn says 2011 playbook will see a bounce tomorrow, then another retest of lows on Wednesday. Could be. Glenn's been pretty accurate with that kind of stuff for sure. Andrea, yeah, the guy who said that must be a whippersnapper. Probably. How are you doing, Andrea? How's it going? Frank says this is like the perfect storm between energy bonds and the virus. The EBV, right? EBV scenario. This is like the perfect storm between energy bonds, the virus, etc. Can you finish out a poem with that, Frank? That almost sounds like the beginning of a good poem. Being he, John, I thought about using weekly charts as well, but I think for inexperienced traders like me, such volatility is risky. Well, if you use weekly charts, just make sure that you reduce your position size, because a move in a week is a lot bigger than a move on a day as far as the price goes. JT says, your thoughts on scalping SPY now that it is commission free. What's the downside? Well, having commission free trades is better, definitely, but even with commission free, just make sure, JT, that you have a plan, right? I've never been a scalper. I don't even think I really have any scalping strategies, but just make sure that if you're going to try to scalp the S&P, that you have a valid plan to scalp the S&P, which are, I'm not a scalper, so I don't really have any S&P strategies to scalp. Ramble says, my mom was supposed to go on a cruise in May. I told her to cancel. I think that's good advice. Sweet. I used to own an e-cig store. I vape too. Did you really? Very good. Yeah, I quit smoking last year, and so the vape really helped me quit. I guess it's better. It's definitely better than smoking. I definitely feel better. Not coughing, all that kind of stuff. And so Evan says, yes, I am at a PPLT and ORLY. Okay. So PPLT looks like it was a little bit of a loss unless you took some profits, hit some profit targets, which honestly, I don't even remember what a profit target is like. There were some days when I was doing my records that I had so many profit targets. I was like, oh, all these profit targets. Oh, man. Be happy with when you have them, right? Nice trade. Nice trade on ORLY. Evan, good job, bud. Man, I am glad I got this stream up and going. And thank you, Steve, for hanging in there and taking over for me, buddy. I appreciate that. I don't know if Steve's around. Steve, did you take any trades today that you want to get up on the board? Andrew says, I canceled my flight from Boston to San Diego later this month. Probably not a bad idea. Our friend Dr. Jorgensen, he canceled his trip he came back from Indonesia only after a week. He was going to be there for 3 to 6 months. And now he was going to go to Australia next week, and he's canceled that. We're not seeing charts, we're seeing history. True. Jonathan, I'm currently sitting on some physical silver and have more in the mail on its way. Once the market shows signs of recovery, I think I will sell off my silver and get back in the markets. Well, yeah, just, make sure you have a plan, John. Make sure you have a plan as far as where you're getting in, where you're getting out. Get as close as you can to that stop loss. So if you're wrong, hopefully you're wrong the smallest. I've been close to a lot of stop losses lately, but they weren't small losses, right? But this is unusual. This is not usually what happens, but who knows? Maybe it's the new norm. So again, the only thing you have control over, two things in trading: when you get in and how many shares or contracts you buy. That's the only thing. After that, you can have weekends like this. You can have oil wars. You can have coronaviruses. You just never know. Andrea says, talking about the trade or talking to Dr. Jorgensen? I'm not sure I follow on that. Andrea, talking about the trade or talking to Dr. Jorgensen? The whippersnapper? Is that what we're talking about? John says your day trades are kind of scalping. Okay, yeah, that's true. That's true. You're 100% right, John. Some people, when I heard scalping though, I was talking, or what I heard in my head was buying the bid, selling the ask, buying the bid, selling the ask. That's kind of what in my mind I consider scalping. What I was doing there is day trading. But yeah, you're right. John, my TLT calls exploded this weekend. Oh, very good. Glad to see somebody had something. Do you still have them, John? John gone? Ramble says, quit 7 years ago with the vape. Very good. Congratulations, Ramble. It's a tough thing to quit. JT, am canceling my cruise to Russia today. It's scheduled for end of July. Oh my. Already canceled my Japan trip 3 weeks ago. Boy, you're quite the traveler, JT. Frank says, what gets me every time is the one thing I didn't plan on. Ugh. Yeah, isn't that true? Oh, the guy who said he could do better just buying and holding. Yeah, Andrea, you're right. But I mean, doesn't it drive that home? You know, I heard a lot of people talking and bragging about how much they made. And they say, Greg, how much what percent have you made this year? And I tell them, they're like, oh, I did better than that. I said, yeah, I get it. I said, if the market is trending very, very strongly, you're always going to do better than I do because I'm a swing trader. I said, however, if the market goes crashing down, I'm going to do much better than you because, you're most likely a boom and bust investor, right? They make a lot of money on the way up, but the same strength they had by holding on the way up is the same weakness they have by holding it all the way back down. Let's see. I'm going to check something here. Okay, so Steve did take a trade. Let's put Steve down for the trade here. He did buy It says I'm long IBB at 110.99. Off of the 200-day, but it looks like it closed under the 200-day. Let's see. Well, if Steve's around, let me know, but maybe he's using that off of the 250 now. I'm not sure. Oh, I'll tell you what, it feels pretty good to only have one position right now. I mean, after getting clobbered today, but, thing is, with these kind of markets, try to make sure that, you're going to lose, right? It's inevitable. There's losing periods in trading, but what's really difficult is when you lose so much that you almost start thinking in your head, am I ever going to be able to make this back? Is it worth it, right? That's why it's so important to keep those losses small. And look, I didn't have small losses today, but in the big picture, they were small losses, right? What did I have? I had 1, 2, 3, 4 positions, five, four, five, about 2.5% capital loss today, roughly. Don't hold me to that. I'm just rounding in my head, right? So about 2.5%. But, the markets were down 7.5%, the S&P. So again, doesn't put food on the table, but at least outperformed to the downside. So anyway, it's tough. It's tough. That's why trading is so difficult. I think a lot of people thought when market was just going up, trading is not this difficult, but yep. Artful Dodger. Hey, how's it going? What happened to the emergency cut? Just waking up here in Australia. Yeah, we have not. I'm sure we're going to get another interest rate cut, but maybe on the 18th. I think it's on the 18th when they have the next meeting. But who knows? Maybe not. Maybe before then. Matt Arvin. Hey, Greg. Don sent me to say hello. Hey, Matt. Good to see you. That's Don's friend's Matt. That's it. He told me you're doing pretty well trading lately. I'm glad to hear that. Thank you, Matt. Appreciate you coming by. Glenn says markets are moving too smoothly. Down 1,000, up 1,000, down 2,000. Feels like a lot are taking over. Algos are taking over the market. AI has arrived. Could be, but my understanding about algos is that they kind of go away. They're here mainly during the daytime. That's why I say, at the end of the market, they usually turn those things off because the large financial, the manual trades come in. But who knows? But I know primarily they're during the daytime, and I know primarily just for reading books, so they do turn them off at the end of the day, but who knows? John says, I bought 3 tiers of TLT calls, April, May, and June. Sold April a week ago, sold May today, holding on to June. They should go down during the bounce, then come back even stronger. Okay, so you sold some today. April a week ago, sold some today. Good. I like that, phasing out. Which is not a good look on the future of world economy. I agree. Rambo says 8% down now. What was Black Monday? I think it was 25%, Ramble. It was in 1987, right? Let me see. 1987 crash. Black Monday. I think it was 25%. 22%. Fell by 22%. So put that in perspective, right? It's almost 3 times what it was today. 3 times. Frank says Fed is running out of ammo. Yes, they are. What do they have? 1.75% less, I think. Well, we pretty much watched history today, everyone. And if you're still intact, congratulations. There's always tomorrow. Look at trading as a long term. Don't look at it as, all or nothing. Not a marathon, not a sprint. It's a marathon. And if you've had losses today, or if you've had losses this month, like I certainly have, just, try to get a hold of your emotions. Instead of positioning size or larger, position size smaller. And I know it's going to take a while to get back, but the important thing here is capital preservation. It's not making money. Yep. Wow. Crazy. Well, looks like the SPY is up a little bit after hours. Q's up just a little. VIX is down $1, close to. Bob says, more perspective, 22% was 508 points. Yeah. Not when the market was 25,000 either, right? So yeah, 22%. Ryan D, watch the Ray Dalio Economic Machine on YouTube. Kind of scary stuff, but he's a pretty smart dude. Yes, he is. You know, I believe this. I read this, in the beginning of the year, Ray Dalio had, I believe, $1.5 billion puts on the market, January, March. I think they were March 31st puts. So he could have been hedging. Obviously, they manage billions of dollars. Correction, how the economic machine works. Yeah, I've seen that video. Brandon G, sorry if I missed. What are doing with long-term investments? Well, I'm not really a long-term investor, Brandon. But if I were a long-term investor, I would be interested at this point with things like the Dow and the Qs and the SPY. A good long-term approach with trading specifically like the Qs is, staying out of it when it's over the 250, staying in that baby as long as it stays above the 250, right? If you're wrong, you're probably wrong small. If it goes down below, you're staying out. If you trend up, you'll be in it. But that's the important part with trading is good risk to rewards, getting out quickly if you're wrong, staying in long-term if you're right, and having a definitive line in the sand, a level that makes sense, like the 250-day staying out. I would have bought this today if it would have closed above the 250, right? Tomorrow, if it closes above 250, I may buy it. Or if it closes above the 200-day, I may buy it. But these are good levels, deep dip buy levels to buy things at. Doesn't mean they always work, but in the long run, generally what will happen, it will keep you out of big moves to the downside if you're wrong. And if you're going up, then stay in it when it's above. Wow. Well, good group today. Hey, listen, my daily plug, just want to let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I really love to teach. I've had really good success with my clients. I have a course. It's 5 sessions. Each session is between 2 and 3 hours. It is $1,000, but there's a lot of personal attention. It's very intensive, and I really do think it's worth every penny. Not just making money, but ways to not lose money. But I have, like I said, there are 5 sessions, and kind of the format is the first half of the session I teach. I do the teaching. Second half of the session, I ask you a lot of questions, make sure you are paying attention, make sure you understand it. Then we do a lot of chart study. We go lots of charts. We go through tons of days, hundreds of days of charts and simulations. So anyway, if you're interested, what I do like to do is I like to have a Skype call. It's free, and I promise you there's no obligation whatsoever. I don't do that. I would never put pressure on you. And honestly, I just want to work with students that really want to learn, because it's a lot of work. I mean, it is a lot of work to give these lessons, right? So I don't want as many clients as possible. I really don't. And I need days off, right? So, but if you're interested, contact me. You can send me an email. My email's in the description of this video, or you can send me a message on Twitter, and we'll set up the free Skype call. I just want to get to know you a little bit better, talk about your goals and your experience and the challenges you have with trading. You can ask me any questions, and then if we decide we're a good fit together, then we'll schedule the session. So anyway, if you're interested, I think it's a pretty good time down here with this move down here. I mean, there are some good potential longer term investments down here at these deep dip level buys, but who knows? But if you're interested, please reach out to me. And then, if you like today's podcast, if you found it helpful, I really would appreciate it if you take the time and just take the half a second and click that thumbs up button down below the video screen. It helps Google. Let people know that, it's a helpful channel and has some good content. And there's a lot of people out there that need some help with trading, and maybe just some good trading principles, what I try to teach here every day. So anyway, that's it. John says, I redraw my lines in the sand way too often. It keeps me going, adjusting it all. Don't move your lines in the sand. If it goes below, get on out, right? JT says, thanks. Thank you, JT. Kamal says, thank you, Greg. Just keep with the plan, taking stop losses as and when they come. That's right. We can't control anything. Joe says, thanks, Greg. Thank you, Joe. Being he, this is another approach for long-term investment. If a strong stock or index drop by 20%, from the high point, buy half position. If it drop another 20, buy the other half. Yeah, that makes sense. But listen, I would add one thing to that. Don't do that on individual stock. That would be my opinion. Do it on an index where you have diversification, right? Because a single stock can go to zero, right? A single stock can go to zero. But indexes usually don't, because they get rid of the bad companies, they put new ones in. So it's kind of a self-selecting process where they get rid of the weak ones and keep the strong ones. Bing He says, do this only if you believe it will recover back. Yeah, 100%. Yeah, exactly my point. Joe, see y'all. Okay, Joe, good seeing you, bud. Thank you everybody. And thanks for the poems, Frank and Joe. Always appreciate that. And before I let you go, please try to go out and do something nice for somebody today. Just a smile or a wave or a hello or just a little act of kindness. Just be pleasant, right? You really may make a huge impact on that person's day. You really might, right? You'll never know it, but you could change their whole day around. And it's just one little gesture. It doesn't take but a minute, and it's free, right? And maybe someday somebody will do it for you as well. So please remember that, right? Okay, well, have a good rest of your day, everybody. And we will see what happens tomorrow. But thank you all for coming. Always nice to have everyone here. Look forward to it. Take care now. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.